Your demand and supply zones are failing, and that's exactly why you are losing trades. But here is the truth. It is not the strategy that is the problem. It is how you are marking your zones. In this video, I'll be showing you the right way to mark your demand and supply zones for better results. So before we go any further, if you want to actually understand demand and supply the right way, make sure you subscribe to FlexFS Academy because I'm going to break this down in the simplest way possible. Using the TradingView platform. I do this almost every morning before the day begins, around 7 a.m. West African time. I try to mark out my zones so that I'll just wait for the market to come into my zone and then I take my trade. So you may be wondering what this line is. This is my SMA. It's a simple moving average. I use this to know the bias for the day. So if you're finding it difficult, okay, this will help you a lot. If you're finding it difficult to do top-down analysis or actually know what the trend of the market for the day is or the daily bias is, just simply add the 50 SMA to your chart. This helps you very well. Whenever the market is above the 50 SMA, you buy dips, you go for longs, and whenever it is below the 50 SMA, you look for shorts. That means you're buying high and then hoping to follow the market down. So having said that, let's begin. So as you can see here, this is a rally. This is a decisive candle here, and then we have a base here. Well, a lot of people think base must be straight and flat. No, a base can be slightly upward, but if you notice, they are all tiny or little candles. Not necessarily tiny, but at least they are little candles. Okay, this is what you classify as a base, and then we have another rally here. Okay, and then we have another base here before we have this drop. Okay, so but this one does not count. If I'm trying to pick a zone, this does not count, but this is actually a very good base. So if I take my rectangle tool here and then I mark out this base here as a zone, okay, and then arrange it properly. Okay, so you can actually see that the market came back, tapped into it, and push up. This is exactly what you want to see. This is a perfect zone here. So always ensure that your zone is between two either explosive or decisive candle. First of all, what is an explosive or decisive candle for those that do not know what that means? Okay, let me get my drawing tool here. So this is a typical candle, right? This is a candle. Okay, sorry, pardon my drawing. This is a candle with a wick here, with a wick here. This is a decisive candle. Okay, because the candle is fuller, is a full candle. Okay, the body size is bigger than the wicks, as you can see. So this can be classified as a decisive candle. Now this, a candle without a wick, like I said, pardon my drawing, without a wick or just little wick, can be classified as a decisive candle. Can be classified as a decisive candle. Okay, a candle like this is not a decisive candle and is not an explosive candle. This is just a candle, right? Depending, if it's like this, you can call it the hammer or the star, what have you, the morning star, all the names you have. But however, what we are looking for here is decisive candle, candles that the body are bigger than the wick. When you combine these two wick together, you can see that it is bigger, the body is bigger than both wick. For example, you can have it this way again, where the wick is just on one side, but it is a small wick, right? This wick cannot be compared to the body. As you can see, the body is way bigger than the wick. So this is a decisive candle. This is a decisive candle. This is an explosive candle. An explosive candle has just tiny wick or no wick at all. Some candle can have no wick at all. That is what we call explosive candle, right? These ones that have wick, just tiny wick, this one that have wick up or wick down, or just a decisive candle. Okay, so the tinier the wick, the better. All right, let me clean this off. So always ensure that you're going for decisive candles at all time or explosive candles. Do not mark your zones where the push is only is not decisive or is not an explosive candle, because if you do that, the market is most likely to come back, and take you out. So in a situation like this, you see that we have in fact, this is an explosive candle here. This is another decisive candle here. So we had a decisive candle, and here we have an explosive candle. Okay, so when the market came down, it tapped into it, and then we have a boom. Okay, we have a rally here, and so here again we have another one here. So I'll mark this out again as another zone. It's another zone. I like starting from the wick of the zone, okay, to the down of the wick. So this is another zone, and then we have another decisive, in fact explosive candle, because the wick is very tiny. This is another explosive candle, a decisive candle, and then we have another zone here. So this is another zone. So I'm going to mark this zone again with my rectangle tool here. So we have another zone here. So please mind you, this is a 4-hour, we're on a 4-hour time frame. Okay, this is a 4-hour time frame. So wait for the market to come down here, and tap into this zone. I'm hoping to take a trade to the upside, but before then I would like to make sure that this my zone here, right, is in the discount zone. Okay, first I'm sure that I'm at the, I've drawn my zone properly, because it is touching the wick of this candle, and also the wick at the bottom here. Okay, sometimes I may even bring it down and let it rest on the body of the last candle. This is the last candle here, so I'll just let it rest on the body here, and then wait for the market to come down, and then take me in, and then we'll go up. But however, sometimes the market will just come and tap on the wick, connect with the wick, and then goes up. So I rather place it on the wick of the candle here, so that when the market comes in, I'll just be waiting for my entry signal here before I go up. However, before that time, what I do is, to be sure that this zone is a very, very, very valid zone, what I'll do is to take my Fibonacci tool and then check if I'm on a discount zone. Okay, I'll take it from the bottom to the top. As you can see, I am below the 50% discount zone. So this zone is a valid zone. So I'm hoping the market comes back in here. Definitely will be going up for a rally. Okay, so let me fast forward this right now. Let's see what the result is. Okay, I'll take this out. Okay, let me push this. So the market is coming down. Okay, all right, so we've tapped in. You can see that we've tapped in, and then we have a push, right? So if once we tapped in and we have a push, if I'm on this trade, I'll be hoping for a rally to the upside. However, if I'm trading on the 15 minutes time, on the 4-hour time frame, on the 4-hour time frame, I'm only going for 1-to-1. Okay, I'm only going for 1-to-1. But if I want to enter this trade, the best time frame I'll rather enter this trade with is the 5 minutes time frame. Let me show you. This should be on another video, but let me just show you how I can take this trade on this particular time frame. But subsequent video, I will show you how I refine my entries better, to take better trade. But I just want to show you how this will work on a 5-minute time frame. So I'm going to use my select bar here and then go back again. Okay, so we've not yet tapped in here. I'll just go down to my 5-minute time frame. Okay, on the 5-minute time frame, you can see that we're almost near to the zone. So I will just hold on. I'll just hold on while the market comes to me. All right, so now we're in the zone. So right now we've entered this entered my zone. Okay, so what I'm going to do right now is to wait for my entry. So I'm waiting for my entry signal, which definitely I'm going to teach on these channels. Okay, so here we are. We have a break of structure here. Okay, and then we have a confirmation here. So with this, I will just enter for a long, for a 2-to-1. So I'll put my stop loss just below here, and then I'll target 2 to 1. That's simple. Let's see how it plays out. And TP is smashed just like that. As you can see, TP is smashed just like that. So once let me go through it again. Okay, on the 4-hour time frame, we identify this zone here. Okay, and then we identify that this is a decisive candle, this is a decisive candle or an explosive one, and then after the decisive candle we marked out our zone. Okay, and then we have the market come back into the zone. Once it is in the zone, we go down to the 5-minute time frame. On the 5-minute time frame, we look for our entry. So tapped into our zone, gave a decisive candle, which is very vital. Decisive candle, a break of structure, because this decisive candle is also breaking the structure, as you can see. And then I don't usually enter on this first break of structure. I wait for a confirmation candle closing above the break of structure. So once I had the confirmation candle here, immediately it closes, I enter, placing my stop loss just below the explosive candle that we had here, and then I aim for 2 to 1, and as you can see, TP was smashed. Based on our zones, the zones we've marked out so far, okay, you can see that this zone, after this entry, and then we have a push up, is no longer valid for me. I will no longer trade this zone. I'll now be waiting for this zone. This is the next valid zone that I have, and then this one here is no longer valid for me because we've had a tap into it and then a push up. So if you trade this zone, there's a high probability that you're going to lose. Okay, if you trade this zone again, let's say the market comes down again and then gives a sign that it wants to go back up, and then you enter, you're very, very likely to lose. All right, so don't try it. The best thing to do is to always trade fresh zones. Okay, fresh zones that has not been mitigated. All right, those are the zones you should always look out for. So this is a fresh zone. That's why we made the profit we made here. Okay, sometimes even zones that are not fresh can still book push up again and give you good profit. However, it is rare. It doesn't happen all the time. Okay, on most cases, zone that has been mitigated will always fail. So I rather not risk my money trying to take what I know has been mitigated. It's not a good business sense. Okay, remember, trading is business. Okay, so you must treat it as one. So because we know that a mitigated zone is as good as the juice in it has been milked off, so just let it go. Look for the next zone. So this is the next zone. So when the market comes back in here, I'll take the trade. Definitely I'll be in for a profit. Not certain, but definitely, but most certain, but not at least to some extent I'm certain that will be profitable because of what we have here is a very good zone. Okay, now this last zone is a zone that is not certain. Is a zone that I will not recommend, though the tap was not deep. However, it has been tapped, so just let go. Okay, look for a new zone, check another market, scan through the market. There's so many currency pairs you can get other opportunities from. So why would you want to take zone that has been mitigated already? Leave it and move on. Look for other currency pairs that you can get a good viable zone, and then enter and then make good profits. All right, so never you take a zone that has been mitigated. This one has been mitigated. Where's my drawing tool here? This one here has been mitigated. This one here has been mitigated now, and this one here too has been mitigated. This is the only value zone we have right now based on our trade. Okay, someone might see this movement here now and call it a zone because there is a decisive candle here. Okay, so what you're failing to understand is that yes, this is a decisive candle, but what is the candle leading to it is not decisive. And so if you mark a zone here and say this is a zone, it does not hold, because the candle coming in here is not decisive, right? And as you can see, the candle is not decisive at all. The push out, yes, may be a decisive candle, but the candle that led to the base here is not a decisive candle. So always remember, how you can mark your zone, ensure that a decisive candle, right, led to the base, okay, and then another decisive candle left the base. All right, it can also happen this way. You know, this is called drop base rally, right? Another way you can look at it is a decisive candle, okay, led to your base and then dropped. Another decisive candle dropped down, giving it is a very serious, you know, bearish move. So you can call this drop base drop. Okay, another way you can also look at it is a decisive candle here, okay, led to a base and then another decisive candle here. So this is a rally base rally. All right, and then the final way you can also look at it is a decisive candle, okay, pushed up, all right, led to a rally here, led to a base here, sorry, and then we have a push down. This is rally base drop. So these are the four scenarios rather. These are the four situations where, you know, you can use your demand and supply, you know, perfectly to get a very good, you know, result. A drop base rally, a drop base drop, a rally base rally, and a rally base drop. Those are the four situations that you should be looking out for in the market at all times. These are your four situations: 1, 2, 3, and 4. Okay, stop looking for, you know, random bases and then you call it a zone. It doesn't make sense. The fact that you saw a rally here doesn't make this valid. Okay, there has to be another impulsive candle or explosive candle, decisive candle. I can go on giving you different names of the candle, but I'm sure you get the idea. It's serious candle, decisive or explosive, must be dropping down into your zone, creating a base, and then moving out. That is when you cannot call it a zone. Okay, that is when you can call it a zone. For example, let's take at these ones that we looked at earlier here. Okay, this is a rally base rally. Okay, so this is my base. That base is a zone. Okay, here again we have a rally base rally. Okay, this is a rally, this is the base, and this is another rally. So here is my zone. Okay, here again we have a rally here, a base here, and then a rally. All right, so with this, if you're always marking your zones properly, you will never go wrong. Trust me, you'll never go wrong. Okay, so I hope you understand this concept. Subsequently in the videos I'll make ahead, I'll explain more, you know, create more videos to explain how I perfect my entry to ensure that I do not lose trades, and also how you can master your zones and the best sessions that you can aim for your entries. Okay, so I'll see you in the next video.